all of you have done this. I'm sure by now, all of you have done this area. And this is a pure individuals trading income as well as employment income. This question is basically a mixture of trading income and employment income. Trading income and employment income. Trading income and employment income. Okay. So let's take a short break, prayers break, like 10 minutes break, and then we'll resume again, okay, with the Excel practice as well. So take a short break now. Okay, dear students, now we are starting question number 2. Question number 2 is about individuals. It's about trading income. Listen, it's about basis period, it's about capital allowances, and it's about employment income. Okay. And in capital allowances, you have the last period of account in which the business is closed. Business is closed. Remember, cease. Business is closed, right? So if you have taken the lectures, this will be very easy for you if you have definitely taken the lectures. Okay. Now let's move to the question. I will explain you the question first, and then we will go to the Excel part and we will solve it on the Excel. Okay. No, not a big deal. Listen, on 31st July 2022, on 31st of July 2022, Hannah stopped. Very important information, self-employment. So not only the closing year rules of business income will apply, basis period closing year rules will apply, number one. And number two, the capital allowances calculation will be different in the last year, you remember. Then they are saying on 1st January 2023, she commenced the employment with Lomley Limited. What does it mean? Now, wait. Just think this is your fiscal year, April, May, June. I know it starts from 6th April, but I'm right now writing April. So it's April, May, June, July, August, September, October, November, December, Jan, Feb, and March. Now, in this fiscal year, my dear student, she closed the business. In July, and here the business is closed. And then she started the job here. Now, strictly, I'm telling you one thing, that employment income is always calculated for fiscal year. And in this fiscal year, she did job for only 3 months. In this fiscal year, she did job for 3 months only. So you have to calculate. This is the second requirement, not the first. You have to calculate employment income for 3 months only in this question. Don't forget this thing. In this question, you have to calculate employment income for 3 months only, right? Okay. Now, then they are saying that the business is closed here. The following information in respect of the 22-23, Hannah's tax adjusted trading profit for the 3 months ended. See, these are the 3 months. The business is closed on July, and the last accounting period is for 3 months. That means the business ended on July. So the last accounting period started in May. And the previous accounting period was ended on April. Now wait, let me write the previous accounting period. Your previous accounting period was ending on 34. April means 4/22. So that means if you go back 12 months, it will be 1/5/2021. And now your last accounting period is, after 34, it's 1/5/22 to 37 to 31st. Sorry, it's 31/7/2022, right? I have just written the last 2 accounting period using my brain. I have just written the last 2 accounting period using my common sense. Okay, using my common sense. Now, can anybody tell me? There are 2 types of closing year rules. Which closing year rule will apply here? Should I tell you? In this case, This is the ending date of last accounting period. This is the ending date of last accounting period, and this is the ending date of second last accounting period. This is the ending date of last accounting period, and this is the ending date of second last accounting period. If your eyes are open and if your brain is open, you can easily recognize that in this case, last and second last accounting period ends in same fiscal year. Last and second last accounting period ends in same fiscal year, so you need to merge them. So in terms of basis period, you have to merge them. In terms of basis period, you have to merge these two accounting period. Although I will do it later on. But yes, if last and second last accounting period ends in same fiscal year, you have to merge them. Okay, don't forget. Now, before we move on towards the basis period, first we have to calculate capital allowances. And for these 3 months, the last accounting period, we have to calculate capital allowances. So they are saying that the profit for the last accounting period is 66,000, but this figure is before taking account of capital allowances, So these are the data for capital allowance. This is the data for capital allowance. Now, should I tell you one news? Whenever there is a last accounting period, there is no AIA, there is no WDA 6%, 8%, nothing. Only real capital allowance you get, that is balancing adjustment. Whenever the business is closed, you don't get any AIA, you don't get any WDA 6% or 8%, you just get real balancing adjustment. Okay, so let's do it in the way you did in the class. Listen, first I'm doing it here on a rough basis, and then I'll tell you the formal way on the Excel. So you have the opening balances were main pool and a car. This is the MP main pool, and you have a car which is basically privately used asset, by owner. Privately used asset by owner. I hope you remember, whenever there is an asset which is privately used by owner, you need to depool it. Okay, so the opening balance is 25 and this is 7,700. Now the car has a CO2 emission rate of 105. 105 means this car is a special rate pool car, or you call it, it will get a 6% WDA. It gets a 6% WDA in normal circumstances. Okay, and is used by HANA 40% for business mileage. Means HANA is the owner. If owner uses any car for private purposes, so that means it's a privately used asset and you need to apportion the allowance. So 40% is the business and 60% is the private. Okay, hope you remember. Now, on 15th May 2022, they bought office equipment. So this is opening balance, and now we bought office equipment. It's added. Office equipment is 4,500. So just do it in this way, in very simple way. Even I taught this same question in my class. I normally, in my LMS, in my working question, such questions are included. So just think, this opening balance is also a purchases. Just assume this opening balance is basically NBV, but just think it's a new asset. So 2,500 or 25,000, you bought asset for 25,000 and 4,500. So in total you bought asset for 29,500. In total you bought asset for 29,500. And then look at here, they are saying all items of plant and machinery were disposed on the following proceeds. Main pool, everything is sold for 29,000 and sold for 29. Now check it out. We bought the asset for 29,500. We bought the asset for 29,500 and we sold it for 29,000. We bought it for 29,500 and we sold it for 29,000. That means there is a real depreciation. There is a real depreciation of 500, which is balancing allowance. So there is a balancing allowance of how much? 500. And this will straight away go in the allowance column. This will straight away go in the allowance column of 500. Okay. And the good news is None of the items were sold for more than cost. There is no restriction of that case. All are sold for less than cost. That means the disposal proceeds are perfect. Disposal proceeds are perfect to be deducted. Now come to the car. Now come to the car. Just think the cost of car is 7,700 and it is sold for 10,000. So you see a negative amount. You see a negative amount, and negative amount is always balancing charge. Negative amount is always a balancing charge. So it will be, I think, 77 minus 10,000, which is 2,300 negative, which is balancing charge. But now, normally tax department gives you 100%, but now normally tax department gives you everything 100%. But yes, you did one bad thing in this question. You did one bad thing, which is private use. Remember when I was teaching in class, in Urdu class, I used to say kyun kiya private use, kyun kiya private use, to punishment to milegi. So only business percentage is allowed. 2,300 multiplied by 40% is how much? 2,300 multiplied by 40% is how much? Tell me. 2,300 multiplied by 40% is how much? Tell me. 920. Yes. So it's 920 negative. Now, can anybody tell me? There is a 920 negative and 500 positive. So final answer is 420 negative, which is a balancing charge. So you have a final net balancing charge of 420, and that's the end of the capital allowance here. Final net balancing charge is 420. It's not an allowance, it's a charge. It's not an allowance, it's a charge. If it would be an allowance, then it will be deducted. It will be deducted from the trading profit. As it is no more an allowance, it will be added in trading profit. It will be added in trading profit. So you have a trading profit of 66,000. You will add this 420 plus 420. Now this 420 is no more an allowed expense. This 420 is no more an allowed expense. It's an income. So this will be 66420 will be your final profit for this 3 months. 66420 will be the final profit of this month. 66420. 66420. 66420 will be the final profit of this last 3 months. This is not a balancing allowance, it's a balancing charge. So it will be added. All of you listen one thing. I have sent you a link of WhatsApp group link. You can join this WhatsApp group. All of you, please join the WhatsApp group. Join the WhatsApp group. There is a WhatsApp group link is sent. There is a WhatsApp group link is sent to you guys. There is a WhatsApp group link is sent to you guys. You can join it, right? In the chat box, there is a link. Now, so first of all, we did the capital allowance thing. Now we have to do the basis period. But I am giving you just like 1 minute, to review it. Okay. So this is 66420. Now finally we have to do basis period. See, they have given you the data. Hana's recent tax adjusted trading profits. They have given you last 3 years. Only this year is relevant for you. Only this year is relevant for you. Only this year, because this is second last accounting period. This is second last accounting period. This is only relevant for you. This is only relevant for you. This is only relevant for you. And yes, one more thing is relevant, which is overlapping profits. Because as the business is just closed, so you all remember in the final basis period, you have to deduct overlapping profits. You have to deduct overlapping profits. So my dear students, please open your eyes and come here. This is your second last accounting period, which is the profit is 40,000. Here you have 66420. So what you will do, you will merge these two. You will merge these two and then you will subtract the overlapping profit. You will merge these two. You will merge the last and second last accounting period because of the closing year rules. And then you will deduct overlapping profit. And that's the end of this question. That's the end of the question. That this is what they are asking. They are not asking you to calculate tax. They are just asking you the final trading income for 22-23. They are just asking you the final tax adjusted trading profit for 22-23 fiscal year. Okay. So I repeat what you just did in this question. You recognize, listen to me, you recognize the case that this is the case of closing year rules. Then first you did capital allowance. In the capital allowance section, there was some balancing allowances and balancing charges. So you adjust it and then you calculate the true tax adjusted trading profit for last accounting period. And then finally you applied the basis period rules. Finally, you applied the basis period rules, and this is how you applied the basis period rule. In the basis period rules, there was closing. In this question, closing year rules were applied. And which case was applied? The case was the last and second last. See, the last and second last accounting period ends in same fiscal year. The last and second last accounting period ends in same fiscal year. So in that case, you need to merge them. The last and second last accounting period ends in same fiscal year. In that case, you need to merge them. In that case, you need to merge them. Okay. In that case, you need to merge them. See the requirement. Calculate the trading income assessment of HANA for the tax year 22-23. So trading income assessment means final basis period calculation. Final basis period calculation, right? So you did the 6 marks. And now you have a B requirement, which is employment income, but be careful. Be careful. She did job for only 3 months. In this fiscal year, she did job for only, in this fiscal year, she did job for only 3 months. She did job for only 3 months. She did job for only 3 months. Okay. Now this is basically the story of employment income. This is basically the story of employment income. This is basically the story of employment income. Listen, on 1st January 2023, Hannah commenced employment with Lomley Limited, earning a gross annual salary of 125,000. Earning a gross annual salary of 125,000. See, this is annual salary. This is annual salary. So you need to multiply it by 3/12 because she did only 3 months job in this fiscal year. In this fiscal year, she did job for 3 months. So now use your common sense. We have to make, just close your eyes and think. Just close your eyes and think. We have to prepare. We have to prepare the P&L for employment income. So in employment income, the first thing which comes is salary. The first thing which comes is basically salary. So yes, 3/12 is must. Don't worry. Don't forget. Now these are the benefits. We all know there are 2 types of benefits. Where we all know there are 2 types of benefits in employment income. Number 1 is taxable benefit and number 2 is exempt benefit. Number 1 is taxable benefit and number 2 is exempt benefit, right? On first, see the date. On first, Hannah moved into the property owned by, that means employer. Lomley Limited is employer. So employer has provided property, which does not, this is qualify as job related. Remember, job related. So no reliefs are available. No reliefs are available. The property has an annual value. Yes, annual value of 16,000. So annual value is full-time taxable. Annual value is full-time taxable. Annual value means market rent. But don't forget the word annual. Annual means 12 months. So annual value is how much? It is 16,000. So you need to do 3 upon 12. You need to do 3 upon 12. I think it's 4,000. So annual value will go in the P&L, and then there is an additional benefit. My respected student, there is you remember additional benefit. There are people who live in very high level houses. There are people who live in high level houses. So I told you in the class, in progressive tax system, if you live in a big house, so there you will have to pay more tax. Let's see. The property was purchased by employer, the Lomley Limited, on 1st September 2020 for 250. This is the cost, and the market value is 280. Remember the additional benefit. For additional benefit, 2 dates are very important. For additional benefit, 2 dates are very important. What are the dates? The dates are when bought by employer, and when first provided to employee. When bought by employer and when first provided to employee. So you bought it on, you bought it on 1st September 20, you bought it, and you gave to employee on January 23. So there is a gap of only hardly 3 years or 2 years. There is a gap of hardly 3 years or 2 years, which is less than 6 years. Remember this 6 years. So in this case, original cost plus all improvement before 6th April 2022 will be used. In short, original cost will be used. So this is original cost. So how to calculate additional benefit? Look here. It's going to be 250,000 minus 75,000 multiplied by 2%. 250,000 minus 75,000 multiplied by 2%. This 2% is for the whole year. Okay. Again, you will get the per year benefit. How much is it? Can you tell me? Can anybody tell me the amount? Yes, it's 3,500, and then do 3 upon 12. Because this is annual benefit. This 3,500 is the annual benefit. Now you have to do 3 upon 12. It's 875 or 8. Yes, it's 875. So these are the two benefits. These are the two benefits for accommodation. These are the two benefits of accommodation. These are the two benefits of accommodation. These are the two benefits of accommodation. Please don't sleep. Next thing is beneficial loan. You remember the interest-free loans or cheap loans? So let's see it. Lomley Limited provide with interest-free. So can you tell me what is the official rate of interest nowadays? What are the official rate of interest for our course? Tell me in the chat box. Yes, 2%. So 2% is the official rate, and employer gave me on 0%. So my benefit is straight away 2%. 2% is my straight away benefit. In this question, we'll calculate on 2%. But yes, we got the loan on 1st January for 60,000. She has repaid. See, the game is technical. She has repaid 2,500 at the end of each month, starting on 31st January 23. The taxable benefit is, see, they have told you the taxable benefit in respect of this loan is calculated using average method. So no other method to be used. Examiner has openly told you that just use the average method. So don't think about any other method. We all know the other method, but no need. So what is the average method calculation? Opening outstanding loan plus closing outstanding loan divided by 2. Opening plus closing divided by 2. So what is the opening loan? Starting loan is 60. and just 3 months in this fiscal year, she did job in just for 3 months. In this fiscal year, she did job for 3 months. So every month she's repaying 2,500. Every month she's repaying 2,500. Look here. Listen, every month she's paying 2,500. So 60,000 minus 25 minus 25 minus 25, 3 times 2,500 you have to deduct. So automatically by the end of the fiscal year, it will be 52,500. So opening outstanding loan is 60 plus closing outstanding loan is 52,500 divided by 2, multiply by the benefit rate is 2%. But wait, this 2% is for the whole year. This 2% is again for the whole year, and you enjoyed the benefit for only 3 months. You enjoyed the benefit for 3 months. This is the loan benefit. This is going to be your loan benefit. No, well, how much is this? It's a big amount. What is the answer? 281 is the answer. So if you guys are active, these are the basic, they have given you a basic employment income question. They have given you peanuts type. This is peanuts type employment income: salary, additional benefit, house benefit, loan benefit. You have done many times. This is, your classes are full of these things. So this is not a challenging type question. This is not a challenger at all. Next one is travel expenses. Travel and expenses. Now there is a concept of mileage allowance. Mileage allowance. What is mileage allowance? Employee using his own private car for the business of employer. Employee using his own private car for the business of employer. So in that case, employee's car will be depreciated, wear and tear, oil change. There are many expenses. So these actual expenses are not allowed. Instead of all these, tax department allows you a ready-made mileage allowance. Okay. And there are fixed rates for mileage allowance. 0 to 10,000, it's 45 pence per mile, and 10,000 miles and above, it's 25 pence. Okay. This is one thing, mileage allowance. The other thing is when you drive your car, when you drive your car for the business of employer, so employer will give you some amount. Employer pays you some amount, and that is called amount received. And this amount received is full-time taxable. It will be added. So there are two concepts. The first thing is amount received will simply be added. But the mileage allowance will be deducted. Okay. So now keep this concept in mind and read this line. During the period on 1st January to 5th April 23, Hana is the employee. Her means own private car to travel 6,000 business miles. Yes, mileage allowance is calculated only on business miles. She was reimbursed, means paid, by Lomley Limited, that is employer, at a rate of 50 pence per mile. So now just concentrate on this 1.5 line. Just concentrate on this 1.5 line. 1.5 line. That's it. Just concentrate on this 1.5 line. The first thing is amount received. The first thing is amount received. Right? The first thing is amount received, which is 6,000 miles multiplied by 50 pence. Employer paid 50 pence, which is 0.5. That's it. So it's going to be 3,000. Now, second thing is mileage allowance. You know, the mileage allowance, the rate for mileage allowance are fixed. The rates for mileage allowances are fixed for less than 0 to 10,000 miles. 0 to 10,000 miles, it's 45 pence per mile. 0 to 10,000 miles, it's 45 pence. Okay. So yes, 6,000 miles comes under 10,000 miles. So it's 0.45. What is the amount? Can you anybody tell me? 2,700. Okay. So you have two options. First, add the 3,000 in the employment income and then subtract 2,700. So ultimately, the net positive amount in the employment income will be 300. Okay. So you can show this whole working in the front sheet, or you can do in the working and then just post the net 300 amount. Just post the net 300 positive amount. It's not negative, it's positive. Okay. Next. Hannah also paid 450 out of her own bank account for a hotel rooms which she stayed in during business trips. Business trips. Lomley Limited reimbursed her for these expenses on 20th March 23. You know what is the treatment? No treatment for this. No treatment for this. Why? Because no private benefit to employee. No private benefit to employee. Why? Let me give you one example. Let us say I'm just a teacher in any school or college. I'm just an employee teacher. I'm just an employee teacher in any school or college, right? And there are two campuses of that college, like one campus in one city and the other in other city. So they sent me to teach in the other city. And I'm the employee. But when I read there were no markers. So I purchased the marker with my own pocket. Marker is a business use things, right, for teaching. So I purchased the marker with my own pocket, and later on when I went to the head office, the other campus, I asked them to reimburse me. So they gave me. So this is no transaction. Like, at one end I paid the business expense, and on the other end I collected it. So no more private benefit to employee. Not a benefit to employee. It's not even a benefit to employee. So you don't need to do anything. Just write zero. Just write zero for this. You can read it again. See, this is a business trip. So for business trips, it is the responsibility of employer to pay everything. So we, first of all, employee paid it from his own pocket, and later on employer got the reimbursement. So nothing to do with the employment income. So we'll write zero. Okay. So calculate the employment income for Hannah for the tax year 22-23. You should indicate by the use of zero any items which are not taxable or deductible. Okay. Right. So A and B are the two requirements. I'll just do now for the Excel work. We have already understood the question. We'll do in minutes. Now think about the C requirement. Once again, free mark. Free. There are a lot of free things in the paper. Explain how the treatment of the property provided to Hannah would differ if it qualified as a job-related accommodation. Listen, they are not asking you the conditions for job-related accommodation. That's not their requirement. They are just asking the account tax treatment. They are just asking you the tax treatment. So hope you remember, if any accommodation becomes job-related, if any accommodation becomes job related, then there is no annual value benefit, it's exempt. Annual value benefit is exempt, and additional benefit is also exempt. So you will say that both of these benefits which we have just calculated, both of these benefits which we have just calculated will be exempt. Both of these benefits which we have just calculated will be exempt. Okay, got it? You got it or not? Did you understand the basics of this question? So that we move on to the spreadsheet portion. So that we move on to the spreadsheet portion of this question. Okay. So be with me. Let me go to the okay. Okay. First thing, just to save our time, I have already written all the theory here, all the headings, all the theory I have written here to save our precious time. But in the exam, you will get a blank sheet. In the exam, you will get a blank sheet, you will get a blank sheet. Okay, right? So you will have to type all these things, but my objective is not to teach you typing. So that's why I have written everything ready made. So because your time is precious and my time is also precious. Okay, so in the requirement number A, first we are doing the capital allowances thing. In the requirement number A, first we are doing the capital allowances thing. Now you must have the picture of question. I have scrolled down the question in front of you many times. So you must have the picture of the question. You must have the picture of the question, right? Okay. So we have the opening balance of main pool was 2,500. We have the opening balance of car. We have the opening balance of car is, we have the opening balance of car, which is 7,700. Okay. Okay. Now, is there any addition in this question? Yes, there was a main pool addition of 4,500 of office equipment. 4,500 of office equipment. As a student, you may ask, sir, why there is no AIA? Why there is no AIA? Because in the whenever there is a last accounting period, there is no AIA, no WDS, nothing is available. Only the real workings. Sorry, it's 25,000. Okay. So now, and what is the amount of disposal? The amount of disposal is 29,000. So you will get a balancing, allowance of 500. You will get a balancing allowance of 500. You will get a balancing allowance of 500. Okay. Now, next thing is the car. The opening NBV of car was 7,700 and it was sold for, I think, 10,000. It was sold for 10,000, right? So 7,700 minus 10,000 will give you 2,300. So 2,300 is your balancing charge. But you know, there is just 40% business use. There is just 40% business use. So simply pick this amount. Simply equal, pick this amount and multiply it by 40%. So 920. And now just net it off. So your final overall balancing charge will be 420. This is what we just did. This is what we just did. Okay. This is what we just did in the iPad thing. Okay. And this is the Excel working. Now let's come to the main sheet. Listen. Can you see the trading profit for the period for last 3 months? It was 66,000. Okay. And how much was the balancing charge? The balancing charge was 420. Balancing charge was 420. And you know, we have to add the balancing charge. We have to add the balance. It's not an allowance. It's not an allowed expense. It's a balancing charge. So let me add these two. So you will have 66420. You will have 66420, your final trading profit for last 3 months. Now, what about the second last accounting period? What about the second last accounting period? The second last accounting period trading profit is, the second last accounting period trading profit was 40,000. Second last accounting period trading profit was 40,000. Remember? And then you have some overlapping profit as well. You have some overlapping profit as well. That was 31250. Overlapping profit, you need to subtract 31250. You need to subtract. So let's see what's the final answer be. 66420 plus 40,000 plus 40,000 minus 31250. Let's see what's the final outcomes. 75170. 75170. This is basically your trading income assessment. 75170 is your trading income assessment. Is your trading income assessment. Okay. Are you getting? So this is basically your first requirement, 6 marks. This is basically your first requirement of 6 marks. I'm not repeating it again and again because I have already explained you in the iPad thing. Okay. I have already explained you in iPad portion. Okay, so one more requirement, that is employment income. For employment income, keep this thing in mind again, that you are doing job, only for 3 months. This lady is doing job only for 3 months, so everything will be apportioned. So salary will be 125,000 into 3 upon 12. 125,000 into 3 upon 12 into 3 by 12. It's 31250. Now living accommodations, you need to do some working for this. You have annual value of how much? Annual value is 16,000. I will apportion in the end. I know we have to apportion it, but I will apportion the total in the end. Is 16,000. And what about this? Annual charge will be, let me write the bracket. It will be 250,000 minus 75,000 bracket close times 2% 0.02. Okay. Now let's write it here. Equal bracket open 250,000 minus 75,000 bracket close multiply by 0.02. So it's going to be 19,500. Now finally, this is 19,500. This is the 12 months amount. This is 12 months amount. Finally, you need to do it. 3 upon 12. So equal this amount, multiply by 3 divided by 12. It's 4875. It's 4875. Okay. Definitely 3 upon 12 because you just did job for 3 months. 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 Okay. Now beneficial loan. Beneficial loan using average method. Using average method. Wait. So you will have in average method, what should be the formula? Yes, the opening balance is 60,000, right? and the closing balance is 52,500. So if you add these two, it will become 112,500. If you add these two, it will become 112,500. So what we'll do, equal to this average loan divided by 2, divided by 2. So this is the average loan. And now how to calculate the taxable benefit? Equal this average loan multiply by 2%, multiply by 2% into 3 upon 12 into 3 divided by 12. 2% into 3 upon 12, because we just did job for 3. We just enjoyed this benefit for 3 months. We enjoyed this benefit for 3 months. So it's going to be 281.25. It's going to be 281.25. Just we did this. So it will be 281.25. Okay, you can physically write. Now the next thing is mileage allowance. Very recent topic. Obviously, you received, first of all, you drove 6,000 miles. So 6,000 into 50 pence. 6,000 times 0.5. 6,000 times 0.5. 30,000. And now what is the approved mileage allowance you get? You get equal minus 6,000 times 0.45. So it's going to be, wait. If you take the net benefit, oh, there is some mistake, wait. I have written 60,000 here, sorry, my mistake. Okay, so it's going to be 300, the net benefit. The 300 will be the net benefit. We have already covered it. Go to the main sheet. Okay, and finally the reimbursed expenses. Remember, she paid in the hotel and then she got reimbursed, so the net impact is 0. So your final answer for this employment income question is 36706.25. 36706.25. 36706.25. Or if you round it off, you can still write 36706. If you round it off, you can still write 36706. So almost the question has ended. And now finally you have one line. I have already told you, if this property would qualify for job related accommodation, then there is no annual value benefit and there is no additional benefit. See, this is the 1 mark line. See, this is the 1 mark line. See, this is the 1 mark line for you. 1 mark line for you. Okay. So now we have covered 2 questions. Still one question is left. That is corporation tax, the scoring area. One of my favorite area. I always say, in order to clear the paper, if you want to clear the paper, corporation tax is very important. Corporation tax is a compulsory area in which you can score good. Okay. So let me show you again this is the employment income part. This is the employment income part. This is the employment income part. And my dear student, this is the trading income area. This is the trading income area. This is the trading income area. Don't worry, I'll share this Excel file with you. I'll share the Excel file with you on your WhatsApp group. That's not a big deal, right? So let me move towards to my iPad again. Let me go to my iPad again. Won't take much time.